Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our final live class of the day, Building a Stock Portfolio. I am your host, Kevin Horner. Thank you all for joining me today. We've had a bit of a continuation day in the broad markets. We've got the S&P, the NDX, and the Russell all trading at new highs. And of course, that means opportunities abound for us to explore trade examples for our example portfolio. So we're going to dive in and try and find a few of those for you in the last portion of our class. Of course, if you're new here, we kick things off with a brief review of the market. So we're going to look at those major indices. We're then going to take a peek at our example portfolio. We need to make some adjustments. Conveniently, we've got one of those positions we don't need to make any adjustments on, thanks to one of the order types we're working with there. I'm happy to take you through that situation as well, but we are looking to add more examples to the portfolio. One of the key things about this class in building a stock portfolio is we are not only looking to buy stocks that are already trending upward, but also giving us opportunities to stick with them for as long as the trend continues. So we are not doing a lot of different type of an approach here. It's really just trade management, elevating our stop orders along the way, and taking profits where we can. So we're looking at the example portfolio before getting into the new example trade ideas with you all today. Now I'm joined by my friend and fellow coach Brent Moores in the chat. Say hey to Brent for me today. Remember to follow Brent and me on X, Brent Moores CS, Kevin Horner CS. A great spot to find us when we aren't hosting classes for you here. And with that, let's get to our disclosures so that we can jump to the chart. So first of all, remember, everything we cover for you here should be considered informational and educational only. We are not making any recommendations here, whether it be individual stock positions or an approach to trading per se. We are talking about risk management, but remember, risk management as we lay it out is a single process. You get to confirm the details of that process. Now, I will share my details for this class with all of you, but please consider those just examples as well. We will rely on technical analysis as we look through the markets here. Remember that technical analysis is just one of those decision-making puzzle pieces for us, not the entirety of our decisioning. So try not to base your entry and exit decisions exclusively off technical analysis. All right, we do work in a paper money platform. Just keep in mind that that differs a little bit, but in regard to the majority of what we use in this class, the differences relate most to option trading, and we do not dive into options too frequently here. And when we do, I will always give you a heads up in advance about what you need to be further aware of. And so with that, let's take a look at our S&P 500 here. There we are, everybody, with a new high all-time close. As you can see, we've basically busted this short range we've had. And you know what? This is not bearishness, of course, so we've just moved through to a new high, close at 75.19 and change. The range we're looking at here, riding the 20-day moving average, basically 73.30, let's call it, almost a 200-point range. And a lot of you will start thinking about, well, what does that mean? Should we be thinking about the possibility of a 7,300 to 7,500 range being busted to the upside and giving us another potential 200-point upside opportunity? I mean, that's one of the ways some traders in the short run are going to be looking at the SPX here. We are simply taking our process and carrying it forward regardless of individual equity or index in this case. But that's one of the thoughts that you might take into it is, what is the height of the range we are breaking out from? If the range breakout continues, can it run the height of the range we've just broken from? That's one way to think about it. So we are seeing some bullishness here in the SPX that's carried much more strongly into the NASDAQ and into the Russell today. Now here's the NASDAQ at 1.75%. Just a lovely explosive move to the upside. What more can you say? We continue to ride the 20-day moving average, but again, for a lot of you, the 20-day is too slow. And here's what I mean when we start talking about trend and too slow for a moving average. We have been above the 20-day now since April 8 on the NDX. So that is giving us, what are we looking at here, about 7 weeks or so. In that window, we have not even gotten remotely close to the 20. This was the closest, was the low here at around 28,550 on a day when our 20-day was about 300 points beneath us. So clearly we're not really riding the 20-day. But if we are putting up the 10-day moving average, this has been a little bit more of a heads up, something you can look a little more consistently toward. Now, above the 10-day since April 1, we've had one single day closing below the 10-day right here, and it was right back on path immediately thereafter. So, I mean, what else are you going to say other than perhaps it is the 10-day? Now, not every one of you is going to be worried or concerned about the 10-day to the extent that you would use a couple of days below it as a means of lightening up positionally in the NDX, but it is a way that some traders would handle it. So I find it helpful to know ways that traders in various time frames consider this process, and you get to decide, oh, that's too fast for me. I'm much more likely to only grow concerned if the 20-day gets violated on a close. That could be the trader who's watching this move as well. And some of you would say even the 20-day. Don't care. I just want to see, do we hold the 50-day now that we are so clearly above the 50-day? Look at how far the NDX we're talking about here. If we had to sell down to the 50-day, you would feel it, everybody, because all the way down here, as you can see, we're looking at a pretty healthy pullback. That would be a 12% move to the 50-day moving average at this point in time. And I'm, of course, not suggesting that that's what's coming. But remember, we get 5 to 10% drawdowns pretty consistently, even in the midst of bull markets. Remember, a 10% pullback is simply considered correction phase, by no means a broken trend. So we are quite away from the 50-day net, but that again is pretty much why trend traders will work with the moving average that gives them the greatest confidence and look to lighten up under one of those moving averages suitable to their time frame. Now, we're also going to see the Russell making a wonderful move. This on the heels of the 10-year yield actually coming back to earth a little bit here. We've definitely seen that finally. So you've got the NDX, the RUT here. I'm going to take this line. I'm just going to sling it up to the last highs. So now we hope to have a new level against which to balance risk once more here in the Russell 2000. Now, here is why. The look at the 10-year, everyone. We talked about this in Trader Talk frequently, of course. And by the way, I'll absolutely be back tomorrow morning for Trader Talk on Wednesday with my fellow coach Brent Moores. So check us out tomorrow morning. We'll talk about this in more depth. And I noted the importance of getting beneath that 4.5 level, and we are closed beneath it today. This has been a healthy pullback in the 10-year. It's also an area for support to be found, so we can't get too exuberant no matter what the Russell tells us, up almost 2% today. So this is really positive for the Russell. It's helped us out, no question. And notice the other thing here, as I'm seeing someone call it out, you're right, Zink, take a look at the strength of the RSI. The RSI did make a new high when price are in the yield here. So the strength of this trend is evident still. Pullbacks here have come into the mid-level, all right, the 50 line, in this case, right around 48. Now, let's see if we could see similar strength there in the Russell as you were calling out. So the Russell, when we pulled back and got our fish hook to move higher after testing support, it came to that 45 level. We don't mind 45 in the RSI. And remember, everyone, the reason for that, we have to be cognizant that while we get a 70 level, above 70 is our overbought condition and below 30 is our oversold condition. Remember that in strong trends, we need to migrate those conditions and we need to be thoughtful about it. So sometimes in the midst of a strong uptrend, we find the oversold condition to be between 45 and 55 in the RSI. That can be quite helpful. And so what you're saying there, Zink, is as it relates to the RSI here, we haven't pushed into overbought territory yet. So perhaps telling us we've got more move to go to the upside. That's one way of thinking about it. And the other thing, depending on how we handle the move tomorrow, if we get continuation and we get into the 70 level, many traders are going to consider that to be confirmatory for the Russell 2000 trend. And then the last note today in terms of trend and what's happening, I'm just going to bring up the future quote on oil here, but we're not talking about futures. I just wanted to show the price movement in it. The big reason, as I see it, we got the move upward this morning is tied to the breakdown under this triangle in the price of crude oil. We did have had a decent pullback, but more important than anything else is the broken trend here, having fallen out of consolidation. And so if this oil gets us right back above and right back into the triangle, the uptrend line once more coming tomorrow morning, that can be the headwind that gives us some profit taking on the small caps like we've seen. But you know what? I'm going to let the oil play out and see what happens from there too. So there's your overall review of the market, everybody. Let us move on to the example portfolio. So I'm going to go ahead and close that list, open up the current account list, and let's go into our monitor page just to take a look at how we're performing. Now, we don't generally concern ourselves with the return details here. I just want to point out that our process is working. We have a total of 7 positions in our example portfolio, 7 example trades, and all we're doing again is working to maintain these positions for as long as possible, and that's because we've entered stocks that are already in uptrends, and all we're trying to do is stick with them until those trends break. Now, we're going to start just going on down the list. We're going to start with Halliburton up here. Now, Halliburton in an area of the market that has changed a little bit. Notice this. I'm going to pull up energy. Let me go back here real briefly. Here's the energy group, everybody. You can see that we had this little head fake. Oh, we moved to a new high. Well, not really. We made matching highs with this rally in the energy group, and then we've pulled back. And so, of course, as oil breaks down, as the conflict in Iran continues to show headline risk associated with things improving, which would be negative for oil, negative perhaps for energy broadly, you're seeing a little bit of a pullback. We're under the 20, under the 50-day moving averages here in energy. Now, Halliburton, on the other hand, has managed to do quite well for us. What we are working with in Halliburton, everyone, is not a traditional stop, but rather a trailing stop. Now, remember, the best part about the trailing stop is we don't have to make any adjustments along the way. The system and the platform is doing it for us. And so while we set this up, all we're doing is remaining $3.75 below whatever the highest high has been in Halliburton. We've also taken shares off. I want to point that out. So if you notice up here, we've taken shares off in our trade. We initially had 275 shares. We rallied into resistance and we took off 175. Here is the longer term weekly chart on this, and you can see perhaps why we decided to take profits up here. We didn't know, we still don't, whether this uptrend we're looking at on the daily chart is going to continue, but we knew that there had been 4 other instances of rallying into this level, everyone, and seeing us pull back. So it made sense to be considerate and sell some, and that's exactly what we did, and that's one of the reasons we've been enabled to stick with this remainder. Because for the most part, I mean, there is no guarantee on our trailing stop, of course, where when it triggers, we're going to trade at the next market opening price, whatever the market price is at that time, I should say. And so we can't guarantee that price, even though we hope it'll be pretty near $39.84. We can't guarantee it. But we have taken steps to increase our likelihood of locking in a profitable trade here on Halliburton. So we don't need to make any changes. That trailing stop has ratcheted higher with us for the better part of the last 2 weeks now. So really happy with how that one has played out. Let's keep on moving down the list. Let's go to check out CleanSpark here. We have just recently added this one, and my goodness, it just took off. Let me put up the actual order. So I'll go into my chart settings, make sure my trades are in here. There we go. All right, so we positioned this trade very recently, like I think it was just last week that we got into it. And if I give it a second there, it's going to populate. There we go. So we bought in at 14.98. The thing rallied through these highs in the short run and has just taken off on us, so we don't mind that one bit. Now that we are through this level, though, we should be considering raising our stop order on this position, right? Because we have a profitable trade. The stock was up 7% today. Let us see about raising it. Now, we use in this class an ATR level beneath the preferred moving average. That's one consideration. The other could be a level like a breakout spot. Here, the breakout was at 15.5, and so if we wanted, what we could do is take the ATR beneath the breakout. So let's see how that looks here. If we add the average true range, and our breakout spot is at 1550, and our ATR right now, if you look down below, everybody, you'll see it's at $1.19.5. We're going to call that $1.20. So from 1550 minus $1.20, we could have a stop at 1430 based on that. Currently, our stop is at 1194. Now, 1194, we're at a pretty decent shot of taking a loss on the trade, right? Pretty likely that we would. Now, if we push this up to 1430 approximately, we still aren't in profit situationally, but we're reducing our risk. Now, the only concern that I as a trader would have would be that at 1430, we would still be above the 20-day moving average. It would be right about here. Not terrible, okay? But for some of you, I just want to point out, you might choose not to manage it with the breakout level like I'm talking about here, but rather against the 20-day, in which case you would go $1.20 beneath the 20-day, which would put your stop at about $12.67, excuse me. So instead of at 14.30, you might go to 12.67 if you prefer the 20-day moving average for your management. I feel like let's give it a shot. Let's see if we can keep this thing rocking through the breakout level, and let's push that stop up to that 1430. So I'm going to do that, and that's going to put us, we're going to go a little beneath it. There we go, 1427. Nice odd figure for us. And send and confirm and send, and we're good. Okay, so this is a little tricky, right? Maybe in the next week that 20-day keeps climbing, or the stock even consolidates and moves sideways. That's going to give us a rising 20-day continuation. So we do stand the opportunity for the 20-day to keep moving in our favor, and we could suddenly find that our existing new stop is here beneath the 20-day when we reconvene next week, which wouldn't be all that bad. That would be kind of fine, but we've just reduced our risk quite nicely on this trade. Let's keep it moving here, everybody. We've got let's see, we got EW up next, so sure, we'll look at EW. Here, we took some off today. So let me go point this out. I'm going to shrink this down just a little bit to highlight our trade. We bought in on 100 shares back here at support. We entered into a decision for a bracket to help us get out of this trade. So we bracketed an exit at 87 for half of our shares, and now we are sitting on only 50 shares. But what we want to do now is work to protect those remaining 50 shares and the profitable scenario we have there. So yes, we took some off there. There's EW. Okay, so we still have a profitable position in our remaining 50 shares, and we are in at 78.61. Where do we want to place an exit strategy on this? Well, we've got our choices. We can go back to the confluence down here of our moving averages. Our 50, 220 are all kind of right on top of one another. Some traders would also look at the low of today, believing we've got a breakout in the midst. And if the breakout does work, well, then we shouldn't necessarily revisit today's low all that quickly. So we would perhaps consider today's low at 85.52 minus the ATR, which is currently $2.49 per share, $2.49. So we could totally work with that. And some of you traders, like I said, would use maybe the 20-day. or maybe the 200-day as another one, okay? But the key here is we don't have an existing exit order on our remaining shares, so we need to get one. So we're going to get smart here. We're going to make sure that we protect ourselves. And one other thought is, by being beneath the low of today, if today is the extent of our rally, and by the way, I mean, it's been a good move, right? Even from our, let's take it from our close here to our close here. It's 13% in 2 weeks. That is by no means a terrible trade. So we should be smart about this. Let's lock in, as best we can at least, our profits under today's low, and let's go an ATR beneath that, okay? So that is 85.52 minus the $2.49 ATR. I think you're all seeing that. And that gives us 83.03. So I'm just going to go back to, let's just right click in the watch list. I'm just giving a number of key ways we can do this, everybody, in terms of order entry. But just think about it like this: sell custom with stop. And that's all we're doing. Oh, no, I don't need both of those. I just need the sell. So let's try that one more time. EW, sell. There we go. So I've got 10, but I have 50 shares here. So we'll make sure we get this right. 50 shares as a stop. Good till canceled at a price of 83.03. And then hopefully we get, if we get stopped out, we do so at that approximation. But again, we have no guarantee of price here, everyone. This is another one where if we were 3 days, 4 days, 5 days later, and we had already cleared the red line with some consistency already, we would possibly consider that another reason to check out that trailing stop order. But we're going to keep this one a standard stop for now. And oh, look at where that lines up. It basically goes back to the low of 2 days ago, so Friday's low. So you know what? The truth is, under Friday's low, hey, I would like to be out of this trade, right? Because the implication could be that we might get back to the trend line or the support line, you know, the $4 lower, where we could maybe re-establish the trade if it were still considered, you know, nice from our standpoint. All right, what else we got? How about HPE here? HPE just crushing higher. Holy cow, that thing broke our bull flag and just took off. Look at, and conveniently, we are in this trade a while back, everybody. We bought before a breakout. We bought here in anticipation of a breakout. And I bring this up because this is going to be pertinent when we start looking for new example trades. I wanted to mention that we got this at the right time. This is a big reason why we've been able to manage this trade effectively. So the 20 days continuing decline. We have our stop, an ATR as of last week below the 20-day, I think. Let's change this though to a 10-day and see where we are here. So the 10-day now is basically at the low of Friday now. So maybe what let's do is, well, let's use the 10-day. Let's just go with the 10-day. It's at 33.85, and the ATR on the HPE now is $1.59. We're going to round that up to $1.60. All right, and that means 32.25 becomes our new stop level. Current stop is at 30.38. So we're going to raise this by nearly $2. I'm going to right click, cancel replace. And here we're going to go up to not quite 32.25, but 32.18. Make it 17. 32.17, good till canceled. Remember, the biggest shift here, everybody, we just don't want, we don't want a zero or a nickel. Those are just common prices where many of us traders will place those stops. Let's just give us a little bit more opportunity to not be part of the herd. That's the reason for the odd figures here. All right, so just confirm and send. So we're replacing our sell stop at with a new level at 32.17 from our original at 30 and change. And there we go. So we've elevated that. Now, unfortunately, we still are giving up. Maybe some of you are saying, Kevin, I can't give up 6 points of profit, but that's what we're looking at. And so if you were feeling like that, don't forget, you could easily look at the low of this day. So if today were the extent of the short-term rally, then you would possibly see a close below today's low as the validation of a brief pause in trend. And some traders might use today's low. Remember that close below the low of the high day is the exact inverse of close above the high of the low day. So in upward trends like this, some traders will take a little off on the first close below the low on the day we made a high. And in this case, that would be today potentially. So another way to be thoughtful about it, at least. All right, there's your HPE. Hey, we got a survey opportunity, everybody. Would love to hear from you there. I've heard some great feedback. I've actually, last week, brought a little of this type of conversation into my Trader Talk on Thursday, and it sounded like some of you wanted to see more of that, so be on the lookout for that on this Thursday's Trader Talk when I'm solo once more. But your feedback is always valuable to me as a coach. I really appreciate it. Any comments you make, they all come to me directly. I love hearing from you, and I appreciate your insights, ideas, ways that you would like to see this class continue to evolve. All good things. Let's find out. Yeah, let's take a look, Zink. I think this is all-time highs. And if we were just to take a fairly static approach to watching trends and such, remember we had an all-time high back here in 2018. This is a 10-year chart. I can make it longer though. Let's go max monthly. Okay, so yeah, still same thing, right? But you could see how we acted in this range. The support was tested a number of times, and when we didn't hold it, we cratered, right? We pulled back 40%. I mean, that's not really a pullback. That's about as bearish a pattern as you're going to get. So an aggressive bearish pattern through support, and then once we recaught it, we used it to test once more. And so we've tested here, tested here, tested here, and it's just rally here has been tremendous. I mean, we're looking just over the last 15 months, 93% move in HPE. That's been a really strong one. All right, keeping it going, everybody. We've elevated stops on a number of these already. Let's take a look at one of our newest ones, Morgan Stanley. We just added a couple of weeks back here on, let's see, what date was that? Yeah, May 13. Now this one, the 10-day moving average, not quite what we're looking for. Let's go ahead and replace all our moving details. And we have seen a breakout. We were talking about this one just as a belief in what we'd seen was some improvement in the financials space. And so we were looking for potential leadership here. What we did was stepping in on a beautiful candle day. We had a heck of a hammer that was, but closed above the 20 days. So the belief on this day was, hey, we have a potential validation of the 20-day moving average. And then the very next day, we got that hold. So we had this very brief pullback with a huge hammer at support, and we held the 20-day on the close. Now, it wasn't clean and perfect, obviously. As you can see, we did get a day beneath it right there, and yet it was right back on path the next morning with a beautiful candle, massive candle. And look at the volume there. That's the other thing we could also mention here is that as we broke out, we've seen good volume in the buys. Let's put up a average volume study, not volume profile, but volume average. Let's see here. There it is. It's the 50-day moving average of volume. I like to put that in the volume bars, and that way you can see if volume is bigger. So the big thing is volume through the horizontal moving average line is likely an indication of institutional buying. That's what, maybe not the day where you peek through it like we had a week ago right here, but on a day like this one, for example, absolutely a pretty decent indication, because this type of volume beyond our 50-day average, this is Sorry about that, everybody. Looks like we had a little blip in my internet connection. I apologize for that. We are jumping back into the Morgan Stanley discussion here. And what we're doing today, or at least right now, is to go ahead and raise our stop order on this one. We're going to draw back to the 20-day moving average, which we have at 192.96, and we've added back our average true range over the last 14 sessions down here. You can see it, 446. So we're just going to remove $4.46 from that 20-day, and that gives us 188.50. Currently, our stop order is in at a price. Let's see here. Actually, let's just go ahead and to cancel replace. There we are. So we're in around 180. We need to definitely push that one up because, like I said, we're just trying to capture additional upside here. The stock has really moved in our favor. So we're pushing this up to 188.50 now. So I'm just going to manually pop that in here. And then because, once more, 50 cents we don't prefer, we're going to come beneath it. Down to about 43 cents. That'll just give us a little wiggle room. Oh, Wiley, you know, I know, I cannot get away with my tacos at any moment, as though I were going to step away mid-conversation and grab a bite. You shouldn't put it past me to do something like that, though, just so you know. You are absolutely right. So we are going to raise the stop on this one, everybody, up to 188.43, confirm, and send. There we go. So we are still right beneath it, but we've really reduced our risk, hopefully, on that one, right? Okay, so good move on Morgan Stanley for us. Let's take a look at Eli Lilly as well. Lilly has just kept cruising higher, everybody. Well, we still have, okay, so we're bracketed on this one. This is a very comfortable trade at this point because, simply put, we are either going to be a seller in approximately the 890 range or a seller up here at the 1,110 range approximately. That would be great either way. However, given our location, given the way the stock has moved, we're in at 994.15. I do think it makes sense to raise our stop in here, everybody. So given that today made another new high, let us just go back to this ledge here. So we created a new possible horizontal support with this maneuver. Let's come beneath this by 1 ATR. So that level, we'll use the low on this day. The low here was 1,022. And then our ATR on this right now is 28.42. And that gives us a new stop at 993.58, which would be basically setting us up for close to break even here, everybody. We do not mind that one bit. Again, we can't guarantee the price on these stops, everyone, but we can take this effort to reduce our risk nonetheless. So even though we can't guarantee price, we are trying to be smart and consistent in our process. And I think that's really the key component as traders. It is imperative that we stay consistent to our process. And that is on the 99.30. We got to come beneath that 30 by a few pennies. So down to 27 will do. There we go. All right, so we've now raised our stop. So one of these orders is going to trigger at some point, but the positive right now is that barring a gap move, which we cannot bar, we know we have gap risk on these stop orders. We are in a zone where we have a good shot of breaking even if we got stopped out on the trade. But even though we can't guarantee it, that's a nice, comfortable feeling, though. Not bad. Well, we could read it. Yeah, you're absolutely right. Just remember, our process is not one that I want you to be locked into. The process, perhaps, but recognize maybe the 20-day, but maybe the 10-day. Look at the location of the 10-day. Now, that just happens to have been good coincident, given the fact that we didn't look at the 10-day before moving the trade on this one for you. But you could easily work with the 10 or the 20. Either one of those will work just fine, but it's about your tolerance for risk. Some of you would just say, no, Kevin, I'm not going to give up that much. And you would look at today as the high, and you would take an ATR beneath the low of today. Another way. All that matters is that you've got a process that you are happy with using one of those concepts, right? The 20-day, the 10-day, the low of today, potentially. Any of those would be adequate in terms of management. All right, and then we have one last position, VeriSign here. I'm going to bring this back, all of my details. We got in here at 273.05, again, one where we tested the 20-day moving average beautifully, and it's just continued up for us. So we can work with the 20, we can shift to the 10. I think we work with the 20-day here, everybody, just for consistency. 288.41. And our ATR on VRSN here is 810. All right, and that leaves us with a new stop at 280.31. So let's just do a cancel replace. Okay, we're going to pick up about $7 on this one here, 280.31. And then, of course, because I've got this desire to stay lower, just go a few pennies even further. So 280.23. And that's great given where we are traded right now. Obviously, we're going to give some of that back. But, I mean, again, even at 280.23, while we can't guarantee it, it's higher than our entry, which does give us a little bit of comfort there. All right, so we've got a new stop on VRSN. So there's your process, everybody, as far as raising our stops on our positions that we maintain, working to keep them for as long as we possibly can. Now, we're going to make some changes here. Let's talk about some of these areas of the market we could consider. Two areas that we've been watching are healthcare and financials. I did have a chart on financials. Here we go. So here's the financials. It's still holding the 50-day. We got above the downtrend line. So we had a good day on Friday, and then today took a little bit of a breather with the rest of the market exploding to the upside. So there's been some lack of enthusiasm for financials. And then if we looked at healthcare, 1% down today. Rallied into resistance, pulled back. Now this one might need a little longer, so perhaps we sit tight here. But the trouble that I had today was I thought, hey, let's go find another tech stock. Let's go back and find another technology security that everybody's excited about. And yet, guys, I had so much trouble. First of all, the list is huge in tech. And I just want to point out, remember, all we're looking for are stocks that are already in their uptrend. So they're above their 20, above their 50, above their 200-day moving averages. And the trouble isn't that these patterns aren't strong, it's that they've already made their moves. Unfortunately, we didn't get a shot here. We should have talked about it last week when we found the 20-day here on the 19th. That would have been perfect conversation, Kev. I feel like I blew it for you all there. I'm sorry. Working our way down the list low. Look at this. These are all far away from the 20-day moving averages. It doesn't mean we can't make them work. It just means that we are giving up. We're just not entering at as clean an opportunity as we would prefer. These are bullish trends in bullish segments of the market, but we should be looking for entry nearer an exit strategy so that we limit and mitigate our downside risk. That's ultimately what I would prefer we do. And so I'm looking at these lists and I'm saying, well, I mean, all of these are kind of elevated. Now, Western Digital could work, certainly having broken the downtrend just this last 2 or 3 sessions. Yes, it gapped higher today. Not everybody's going to be on board, though. Look at where the 20-day is versus our close today. We're talking 40 plus points. That's a lot to give up. So I was frustrated by this, mainly because as good as so many of these symbols look, entry on these can be a little bit tricky because we are not near the moving averages, right? I did find one, and so I thought, let's at least consider one of these. How about Keysight? So Keysight here, not so much a 20-day moving average of late. We've had some moves beneath the 20 on this, and until today have been below the 20 here over the last week. Now, our 50-day moving average is 30 points away, but when we look at where we have all-time highs at 370, you know, admittedly, you have to believe this one's going higher to be confident or not comfortable enough to trade against, say, the 50-day moving average. And I think we could do it, but we are giving up about 30 points. So that's getting a little, again, a little long in the tooth in terms of risk. Maybe we start looking at some of these that have struggled today, some of these that are in red today. Maybe there's one or two that could populate. I mean, unfortunately, Apple's at highs, probably not. Same thing with NVIDIA. Oh, well, maybe NVIDIA. Hey, maybe we talk about NVIDIA here, everybody. Well, this one we could work with. If we can get ourselves into this one tomorrow with a stop, an ATR below the low we made today, maybe we've got a chance to catch something here. Now, granted, this is, again, it's a strong trend working against the 20-day, but so we got to give it a little bit of wiggle room here. But I mean, this might work. So what do you say? Let's give this one a shot. Let's see if we can get into NVIDIA. We'll do a quick one here. We're going to use all of our standard process. So that means I'm going to not exceed $1,000 of risk. Okay. We have a position size not to exceed $10,000. We're going to put an exit 10-day, one ATR below the 20-day moving average, being that we're seeing a standard pullback here and nothing more. But we're going to use today's low instead of the 20-day, and this is going to give us a little bit of wiggle room. So the low today, 212, with an ATR of 842. All right. So 212 minus 842 gives us 203.58 for our stop. Now the math on this says we have to try and get ourselves an entrance at a level we'd be happy with. So we've got to give this a padded limit. Okay, the close today was just under 215. We're going to go up to 216 for our limit. Okay, all right. So 216 is our limit. And then our initial stop at 203.58 means we're looking at risk of $12.42. And if we want to be within our tolerance of $1,000, we take 1,000 and divide it by 12.42. And that tells us we should not own more than 80 shares, to which I say, hey, no problem, because that's too big a position. 80 shares times our 216 entrance would be $17,000. That's too big a position. So let's do 50 shares times 216. Nope, we're going to do 40. It's still too big. All right, so it's a 40 share trade at a 216 limit for tomorrow buy, and then we've got a stop at 203.58 thereafter. All right, so let's go ahead and right click in here. Buy custom, no exit on the upside, but no bracket, just with our buy stop. All right, so here we're going to buy 40. Make sure those are linked up. There we go. Buy 40, not to exceed a price of 216. This is one of the names we generally don't find ourselves with an opportunity in here. So maybe we get ourselves lucky with an open tomorrow here. Our stop, again, is going to be down at 203.58. And we have to change that to good till canceled. So now we're going to leave this for tomorrow's business. So if we get in tomorrow, terrific. If it doesn't execute tomorrow, we won't have a trade. Okay? But this is what we're looking for tomorrow. Why did that not move for me? Try that one more time. 203.58 for our stop. There we go. All right, so buying 40 at a price not to exceed 216. Anything under that will get executed only tomorrow. Stop thereafter, 203.58. But again, our price could be anything. It's a market order to sell at that next available price. So quick confirm, validate all my details is accurate. That all looks good. And send. All right, so we are set up for next week. Hopefully we've got a new position in NVIDIA and we get an opportunity to talk about it further. We did get a survey today, everybody. Would love to hear from you. Take a moment to complete that. That link is there, just a few up from the bottom. And As Wiley points out, we always appreciate the thumbs up. That helps me out quite a bit because we get this reviewed by our our oversight team, and then we get this right back into the archive for you as quickly thereafter. That really helps us on the replay, so we would appreciate that. Beyond that, we reviewed the broad market at the close today. So we looked at the S&P, the NASDAQ 100, the Russell 2000. We even checked in on yields and oil, which I'm certain we will do tomorrow morning in Trader Talk. So be prepared for that. We kick off at the market open with the opening bell. I'll be on with Brent, of course, tomorrow morning for Trader Talk, so I'd love to see you all there. Beyond that, we did review our example portfolio. We did raise our stops where necessary. We continue to monitor that trailing stop on Halliburton, and we'll look forward potentially to changing one of these stops in the future weeks here to a trailing stop as well. Another topic for us on another day. But as always, I really appreciate you joining me. Make sure you're following Brent and me on X, Brent Moore CS, Kevin Horner CS. I'm also there on LinkedIn. Do post for you there a few times a week. Not as common as I'm on X, unfortunately, but I'm trying to get there, I promise. So with that, thanks for being here, everybody. Have a great rest of your Tuesday afternoon. I look forward to seeing you all again real soon.